Hello traders, this is Fawad Razakzada, market analyst for City Index. Today is the 30th of October. So the euro dollar has bounced back following the release of some stronger than expected GDP data from the Eurozone this morning. In the US, we had some mixed bag data with GDP coming in slightly weaker than expected, but this was offset by pending home sales and ADP both coming in way above expectations. Following the data releases today, you can see that the euro dollar has bounced back and is now approaching potential resistance around the 108.70 to 109 area, where previously it had found support and resistance. Here we also have the 200-day moving average converging with price, making it a key technical area to watch. On the downside, Monday's high now comes in at 108.26. That area could be the first level of support on any short-term pullback. Below that, we have that trend line coming in at around 107.80 area. And if that area breaks down, then we could see the onset of a more significant drop towards the 107 handle next, in my view. In the equity markets, you can see on the list here that all the major indices are mostly lower, apart from a few in the US. And this is in part because of concerns about a potential win for Trump, who is likely to impose tariffs on China and on Europe. And that's why we're seeing these markets struggle more so than the US in recent days. The DAX in particular is looking quite interesting following its earlier breakdown below this trend line of this rising wedge pattern. It has now broken decisively below 19,400, which is now going to be the first level of resistance to watch on any potential recovery. In terms of support, 19,200 is an interesting level to watch, which has for now provided some support. Below that, we have this area of support at around 18,930-ish or thereabouts, where the index had previously found resistance back in May and a couple of times in August and in September before we broke above it. So we could see some price action around that area should we get there. Below that, the 200-day moving average comes in way lower at around 18,280-ish or so. But we'll cross that bridge if and when we get there. For now, the key level to watch are the ones mentioned earlier. The S&P 500 is holding inside this rising wedge pattern, similar to the DAX chart. Unlike the DAX, though, it hasn't broken the trend support of this pattern. Will it do that in the days ahead? Remains to be seen. If so, then we could see the index head down to potentially this shaded blue area where previously it had found resistance back in July and a couple of other times before we broke above it. So this area at around 5,670 marks a key potential support area to watch in the event of a breakdown. On the upside, there's not much in terms of further resistance now to watch, apart from the all-time high that was hit a couple of weeks ago at 5,882. As well as economic data and the upcoming election, investors in the US are keeping an eye on the outcome of some earnings releases from technology companies that are due shortly. Now, for more market insights and analysis, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.